Ever wondered how the Bitcoin halvening cycle affects its price? Today we demystify this phenomenon. Welcome to the fascinating world of Bitcoin, where every 4 years or so an event occurs that sends shockwaves through the crypto community. This event, known as Bitcoin halvening, is a pre-programmed feature of the Bitcoin network. You see, Bitcoin operates on a system of block rewards. Miners who add new transactions to the blockchain are rewarded with a certain amount of Bitcoin. But with the halvening, this reward gets sliced in half. This is not a random occurrence. It's part of Bitcoin's original design, a mechanism to control the supply of Bitcoin and prevent inflation. It's a bit like a digital gold rush, where the gold becomes increasingly sparse and valuable over time. This halvening event plays a critical role in Bitcoin's economy and has a significant impact on its price. Now that we've set the stage, let's dig deeper into why this event matters. So, how does Bitcoin halvening work, you ask? It's quite straightforward. To understand the mechanics of Bitcoin halvening, let's first talk about how new Bitcoins are created. This happens through a process called mining, where powerful computers solve complex mathematical problems. As a reward, these miners receive a certain amount of Bitcoin. However, roughly every 4 years, an event known as Bitcoin halvening occurs. This event slashes the reward miners receive for their efforts in half. Why does this happen? Well, the creator of Bitcoin, the mysterious Satoshi Nakamoto, designed the system this way to mimic the extraction of gold. Like gold, Bitcoin was designed to have a finite supply, and the halvening ensures we don't run out too soon. This is a key feature that separates Bitcoin from traditional fiat currencies, which governments can print at will. Now, how does this affect the price of Bitcoin? Let's think about it in terms of simple supply and demand. If the number of new Bitcoins entering circulation reduces, but the demand for Bitcoin stays the same or even increases, what do you think happens to the price? That's right, it tends to go up. This is because Bitcoin becomes scarcer. And in the world of economics, scarcity often leads to value. The more scarce something is, the more valuable it becomes, especially if demand for it remains high. In essence, Bitcoin halvening can make the cryptocurrency more valuable over time. Now, history doesn't always predict the future, but it can offer some valuable insights. Let's delve into the past 3 Bitcoin halvening events and their subsequent impact on Bitcoin's price. The first halvening occurred in November of 2012. At that time, the reward for mining a Bitcoin block was cut from 50 to 25 Bitcoins. Over the course of the following year, Bitcoin's price skyrocketed from roughly $12 to over $1,000. That's an impressive increase, isn't it? Fast forward to July 2016, the second halvening saw the block reward further reduced to 12.5 Bitcoins. Although the price didn't surge immediately, it did eventually reach the dizzying heights of nearly $20,000 by the end of 2017. The most recent halvening happened in May 2020. The block reward was halved once more, this time to 6.25 Bitcoins. And while the immediate impact was less dramatic, the price of Bitcoin did eventually surpass $60,000 in early 2021. However, it's important to note that these price increases didn't occur instantly after the halvening. It usually took some time for the market to adjust and for the reduced supply of new Bitcoins to start pushing prices upward. As we can see, halvening events have historically been followed by substantial price surges. So what does the Bitcoin halvening mean for you as an investor or potential investor? Let's recap. Bitcoin halvening is a significant event in the world of cryptocurrencies. It occurs approximately every 4 years, reducing the rewards for mining Bitcoin by half. This reduction in supply, coupled with a constant demand, has historically led to an increase in Bitcoin's price. However, it's essential to bear in mind that while the halvening can spark price hikes, it's not a guaranteed outcome. Market dynamics are influenced by a myriad of factors and can be unpredictable. As such, it's crucial to do your own research, understand the intricacies of the Bitcoin market, and make informed investment decisions. Remember, investing in cryptocurrencies, like any investment, involves risk. It's about understanding these risks and managing them wisely. And there you have it, the Bitcoin halvening cycle and its potential impact on price. Until next time, keep exploring the fascinating world of cryptocurrencies.